Hello and good morning. I'm Ethan Feller from Zacks Investment Research, and this is Momentum Mondays. Hope you all enjoyed your weekend. There's a lot to cover this week, and I'm going to go over the earnings calendar, the economic calendar, show you the broad technicals in the market, and then I'm going to show you a few trading setups. So let's get into it. In the week ahead, we have a fairly busy schedule. Monday starts out fairly slow. We have some Fed speak and U.S. monthly federal budget. Nothing major, although, Fed speakers can always say something interesting. We'll talk a little bit more about interest rates later. Then on Tuesday, we have some very important economic data. We have consumer price index, the month over month and the year over year change. This is, of course, going to be critical to Federal Reserve interest rate policy. And, we've recently been seeing over the last few weeks this shifting expectations for what the Fed's going to be doing. And with, although inflation data has been progressing nicely, we've been seeing disinflation occur over the last year. The economy is still really strong and employment is still really strong. So the Fed is coming out a little bit more hawkish. So, the last thing anyone wants to see is a hot inflation number. So the Wall Street is going to be watching this data extremely closely. Then Wednesday, we get another little break, just some more Fed speak. Thursday, we have a whole litany of data you can see. Initial jobless claims, of course, we get that weekly employment update. We got manufacturing surveys, import price index, retail sales, and that's some more Fed speakers. So the second half of the week is going to get busy. And then Friday, we have some housing data. And then we have producer price index, which is another measure of inflation from the business side. PPE, core PPE, month over month and year over year. And that'll, again, just be another important data point for policymakers regarding inflation. Also on the docket, we have very busy week of earnings. A lot of important companies report this week. ANET, Arista Networks, Cadence Design System. That's on Monday morning or Monday after the close. Waste Management. Tuesday, you can see we have a lot of earnings. On Tuesday, there's 308 companies reported. We got Coca-Cola, Shopify, Airbnb, Marriott, Moody's. A lot of big ones. And on Wednesday, Cisco, Sony, CME Group, Occidental Petroleum, Kraft, HubSpot, Barrick Gold, lots of big companies. Then on Thursday, we got Nestle, Applied Materials, Deere, Stellantis, and I think these sort of tech adjacent semiconductor data center companies, we've been seeing some crazy action in those stocks. So I think it'll be interesting to see, what's happening more broadly in that industry and in that sector. And, there's just this incredible shortage of microchips and associated products. So I don't know, sort of feels like we're in the interesting midway through of some kind of semiconductor cycle. So definitely keep your eye on some of these smaller technology names. And then Friday, it slows up a little bit. Some international companies. Yeah. Nobody broadband. Okay, so let's take a look at the broader market. Right here, we have the NASDAQ 100. We see we had a consolidation, and last week we broke out and continued to move higher. This market is pretty unstoppable at the moment. We got the NASDAQ coming in on 18,000, which is, we were at nearly 14,000 just 2 months ago, which is just incredible. This market is, it's just on fire. And you can't fight it right now. I think we have to be, considering, if it pushes up to this upper bound, that is definitely overbought. But for now, you got to just sort of expect it continues to grind. There's going to be some catalyst. There is going to be a pullback one day. It's not like it's never going to happen, but you can't fight this tape. Let's just take a look at the S&P too. Look at that, just like a perfect straight line, just grinding higher. So, we broke out from this little tiny flag here. Nice gap up, follow through. So this is just a strong market. Per usual, I'm going to share 4 stocks today. I'm going to share 2 that are defensive and 2 that are more aggressive. So for people who still want to measure the downside and take some non-cyclical risk, I will show you some of those. So there's one thing I'm going to show quickly. Bitcoin's been ripping higher the last couple of weeks, especially the last week. It's nearly put in a new year-to-date high, near 50,000. And Bitcoin has been sort of a risk on, risk off sort of read through over the last year or two. And, Bitcoin's strong, and the broader market has been strong. So talking about catalysts and, a potential correction in equities, excuse me. We got interest rates here. This is the 10-year U.S. Treasury note. And we came off, this was right around the Fed. Fed spoke on this day. We sold off pretty hard and we ripped back higher. So with interest rate expectations becoming more hawkish and maybe higher for longer setting in, we might see interest rates continue higher again. And that will probably put some pressure on stocks. So if, maybe another big pop in interest rates, maybe people start focusing again, bonds are selling off, maybe we should add them to our portfolio, or, higher interest rates are going to really slow down the economy or slow down lending. Who knows exactly how it'll play out, but interest rates have steadily been a very important factor in this market. So something to keep an eye on. And then quickly, let's take a look at a couple of these semiconductor. This is SMCI. This has been the strongest one. I mean, this is just ridiculous. Look at this chart. I mean, just this year, it's gone from 280 to 760. And yeah, it's followed the path of NVIDIA, which again, even just in the last, we knew last year had an amazing year. This year, it's already just from 480 to 725. This AI boom, it's pretty real. We're in the midst of it, and it's not stopping for now. And the world is just hungry for microprocessors, data processing, chips. This is another one, ARM. This was a recent IPO, the middle of late last year. I was talking in an article, maybe we see it consolidate sideways, pull back, doesn't care, gap this morning. And so, this is something to watch. You want a fast stock, fast market, check out some semiconductor names. I recommend looking at the leading names, just like these, NVIDIA, ARM, SMCI. Yeah, this is a crazy thing that's going on in the market, so you just keep your eye on it. So now I'm going to hop into the trading setups. I'm going to start with the defensive names first. Excellent. First one's up, we got Clorox. Classic consumer essentials. Just, everyone knows Clorox. Everyone buys their cleaning materials. It's a steady company. It's got a nice dividend, 3%. It tends to be more of a defensive name, kind of like a value stock. Company's been around for 100 years, been paying dividends the whole time. It's got a little bit of a pricey valuation, especially for an old company, 28 times earnings. It's got nice earnings growth forecasts, almost 12% over the next 3 to 5 years, which is very impressive for such a mature company. And of course, it's got a Zacks rank 1, so analysts have been raising estimates. And so Clorox, we got this really nice descending bull wedge, bull flag thing. And looks like it went below the lower bound this morning, but reversed higher. So I like that action. People are buying, gapped up on earnings. I've been seeing a lot of these setups in the market. Earnings gap up, trading sideways, earnings gap up, and trade sideways, boom, breakout. So this is one to watch. And again, I share these defensive names because I say, okay, if the market doesn't play ball, say we finally get, a little sell-off, ideally these defensive names will hold up a little bit better. So if you're looking to balance your portfolio and not go 100% into something like SMCI and NVIDIA and all tech, I like to share these two. So the second defensive name is HCA Healthcare. It is an insurance company, one of the bigger ones, I think second biggest behind which one? I forget, but it's early. So yes, HCA, good company, nice earnings growth, only 15 times forward earnings, little dividend yield. It's got top Zacks rank, got some good style scores too, A's and B's across the board. So yeah, healthcare tends to be more defensive. It's not cyclical. People always need healthcare, and it doesn't really matter what the economy's doing. They're not going to forego their healthcare. So again, these like Clorox, people are always going to buy cleaning supplies. People are always going to buy health insurance. So, and very similar setup. We got this earnings gap up, bull flag, sideways action, and I would not be surprised to see this break out and make another move higher. So above 307, and we'll call that a breakout. And you just want to see it break out and continue, not reverse back into the range or go below this level of support. And it's another good one, HCA. Okay, so we'll hop into the more aggressive names. And we got Netflix. Netflix is doing really well. I'd say they're leading the streaming wars. The most recent quarterly earnings report was very impressive. They had record new subscribers. They added 13 million new subscribers in the last quarter. 250 or 60, 70 million total subscribers. So, and they're adding all kinds of new content. I know they're going to be doing something live with WWE Monday Night Raw, which was a huge deal. I think it was a $5 billion deal. So Netflix, I think they're leading this crazy competitive streaming wars. Earnings per shares growth over the next 35 years, almost 22%. I mean, 33 times forward earnings is not cheap, but for Netflix it is. I've never seen the content company have such a low, it's well below its long-term average relative valuation. And of course, Zacks rank 1. And it's got a nice technical setup as well. And again, we got earnings gap up, right? We had great earnings, trading sideways, breaking out. These are like prototypical technical trading setups that, you can read in any kind of technical analysis book. But it's a really good setup, a really good momentum continuation trading setup. So if you're looking to add something, hard to go wrong with the Zacks rank 1. Even better if you can pair it with some nice technical trading setups. So yeah, Netflix. And finally, another well-known technology name, we got Meta Platforms. This one has been unbelievable over the last 2 years. I think last year, it was up like almost 200%. Continues to be strong this year. Meta and Facebook, people always underestimate. People always have their opinions about it, but it's a platform with a couple billion people that use it every day. And, it's more than just America that that the whole world uses it. And United States is just a small minority of users. So I think the American users tend to be very loud and have very strong opinions on it. But, Meta is it's like a utility almost for some of these emerging markets. It's a yellow book, it's a white pages, it's their video calls. So it's a really, really important technology service internationally. And their ads network is doing well. They've got nice earnings growth, almost 20% expected over the next 3 to 5 years, which again is incredible. Such a large for a $1 trillion company. And again, a reasonable, very reasonable forward earnings multiple, 24 times. I think that's right in line with their long-term median valuation, but it's still pretty low considering, especially compared to like these semiconductor stocks. And of course, top Zacks rank and a nice trading setup. And the same thing, all four, same thing. Earnings gap up, bull flag, and it looks ready to break out above 474 here, and we'll probably see another move to new highs. This one is just okay. We went from $89,475 in 18 months. Pretty incredible. I remember all last year recommending this stock over and over, and it just kept going higher. It was just sitting on the Zacks rank all year. I mean, it wasn't complicated. The Zacks rank, it takes all the earnings, all the analyst estimates, and it aggregates them, and it creates a very nice model to trade from. So yeah, that's it for the trading setups. That's it for today, folks. Hope you found this valuable and entertaining. Tune in next week. I keep coming back every week, showing you these trading setups, giving you the market updates. And if you do like it, please subscribe to the channel and sign up for the promo. You can go to Zacks.com/promo, or you can go to the link in the description. Thanks. Have a good day.